Hi, I'm Victor, and I'm Victor H Investing, and I wanted to review this week's stock activity. This week was another down week. It's the third consecutive week. I'd been expecting this for months to happen, and it's not a big surprise, and I'm not the first one to telegraph that we were going to have a correction. We're down more than 5% overall. I think the S&P this week was down 3.85%, which is a pretty good downward clip. And overall, since the high on March 28th, the S&P is down 5.46%. So it's a pretty good downward slope that we have on the S&P. What I'd also say is the momentum that we're seeing in stock prices is really accelerated downward. It's really destined to continue to go down, I believe, for at least a couple more weeks, maybe hitting about 10-15% overall. We may have an up day, but what we've seen this week and a little bit of last week is the market tried to go up and then it went down even further, which was interesting. The NASDAQ is down 7% in the last 8 days. That's a pretty good drop. What dropped significantly in the NASDAQ was semiconductor companies, and they'd been flying high. So I'm sure I'm not going to cry over an NVIDIA stockholder that's up, I don't know, 1,000% on their investment, and they lost 10% today. They're still up if they bought NVIDIA 3 years ago. They're doing great. But overall, semiconductors really fell today, and they really felt the downturn in the market. What also came down was healthcare. Healthcare was down for the month. It was down 4.54%, which is significant. The one sector that has really kept its gains is the communication services. And this is where Meta, Alphabet, Netflix, that's where they exist. And that sector for the last month is up 4.73%, which is fairly good considering you've got some really high flying companies in there as well. Energy's been doing well for the month, up 3.53%. No big surprise. Oil prices have gone up and oil prices are significantly higher. So not a big surprise there. I think as oil stays in the 80s, oil companies will continue to do well. Oil companies do well if the oil price is above $60 per barrel. And at $83 a barrel, which is what I'm seeing currently, that's a pretty good price for oil companies to make money. So we'll see how that goes. The consumer staples had a good day today. That was one of the winners for the day. But overall, consumer staples have not done well. I think for the month, they're down 1.62%. They were up today by 0.95%. So it's not like consumer staples are really, breaking any records. So overall, it's been a third consecutive week of stock prices going down. It'd be interesting to see, for how many weeks is this going to be a downturn? Last year, we had a small downturn in the springtime, and it went down about 5%, and then it kind of went sideways. Some sectors actually went up, and it did go down about 5%. I can look that up now real quick. On the S&P, mid-year last year, it started in the month of July, and then it went down about 5%, and it ended August 18th. So we had a mid-year correction like this, but the big correction was later on. It started in September 1, and it went all the way through till the end of October, and the market went down 10%, and that happened in the 2023 calendar year. So we'll see what we have in store. Do we have another 5 or 10% down to expect over the next month or two, or will this be it? It's anybody's guess. I think it's healthy to have these pullbacks, especially with the AI hype. There was a lot of speculation in AI companies and super microcomputers. An example, I've done several videos, several shorts on that. That's just a complete speculation. If you look at the chart, it's pretty incredible chart of it going parabolic. But you look at the underlying business is, it's just a hardware business. And they may have 1 or 2 great years followed by a big collapse in revenues. That's what I would expect. I could be completely wrong. And it's just my opinion. I'm not recommending you buy or sell a super microcomputer. I'm just seeing that and thinking that there's excessive greed in the stock market. And when you have pullbacks like these, it's healthy so that greedy behavior really gets pushed back. And you come back to fundamentals, valuing companies based on their fundamentals, valuing companies based on free cash flows, earnings per share, the viability of businesses, the health of those businesses. All those things matter. And with these pullbacks, it just gets us back to what value investors already know. We want to value companies based on their growth, their profitability, their ability to generate free cash flows, and so forth. So this is a good thing. It's a healthy thing for the market. Other events, we're just beginning the earnings season. So we've had a couple of earnings reports. I'd like to comment on a few earnings reports that caught my attention. Netflix was probably the one that was the most surprising. The fundamentals behind NetSuite's, earnings, they were good. Revenue grew really well. Users grew really well. They generated more free cash flow. So those things look really good. What investors did not like is an exuberant, guidance, and they're going to take away reporting of user counts and user growth numbers, which I can understand that investors might feel like they're losing some visibility in the company. But I'm not losing anything. I'm a Netflix investor. I've made good money on Netflix. And I'm going to continue to value the company based on free cash flow and earnings per share. And they're not going to take that information from me. I think user counts are interesting to read, but we can get lost in some, that type of trivial data. At the end of the day, it's a dollars and cents valuation that I put on companies. So I thought the Netflix earnings was either misunderstood or I just don't get it. But at the end of the day, the stock price went down significantly, and I bought 2 more shares of Netflix, putting in a little more than $1,000 into that stock. I've made good money on Netflix. I bought when it collapsed down in the year 2022. The stock went down like 85%. It was just incredible how fast Netflix, the number one streamer, went down. Let me look that up. I think it's 76%. Went down 76% from the high established in the late 2021 timeframe. And around 2022, I bought it and I poured a good amount of capital into Netflix and saw it just rise. It was really fun to watch it go. And from the low point to the top, the stock was up 262%. And that was in roughly 16 months. So it was fun to watch, an investment very quickly just reward me in the form of Netflix. And I think that, if people continue to doubt Netflix, I will gladly buy the stock. That's a great company, number one leader in streaming. They have technology that's ahead of everybody else. The consumer likes Netflix more than any other streaming service. There's just a lot of advantages that I like about their business. I really like the economics behind the business. They are growing their revenue, their top line. They become more profitable year after year. I really like that about Netflix. So, and they generate more free cash flow over time. So, if the market wants to continue to doubt Netflix, I would gladly buy the shares. I've already made money on Netflix. I sold a good portion of my Netflix position. So I'm happy to build another big position in Netflix again and do it all over again. The other earnings report that was pretty amazing this week was United Airlines. And if you caught my video on United Airlines, I released it about a week ago. And in the video, I comment that the fundamentals behind United Airlines are so strong. They produce 23% return if you look at net income to their market cap. I mean, that's such a phenomenal return, but it's an airline. So investors don't like airlines. Well, fast forward, United had their earnings released this week and the stock just took off. In 2 days, the stock was up 24%. I guess investors realize the fundamentals are really strong behind United. And it was really fun to see that stock really move. Airlines were really doing well in 2021. I saw my United stock just do great. And then they just went into a really bear market and they were doing terrible. And they really weren't doing much for the last year and a half, 2 years. But this week was a great week to see the United stock go up. 24% was really fun to watch. And let me take a look at it. Over the last 5 days, it's up 22%. But if you look at just the last couple of days, it's up 24%. So the last three trading days, it's up 24%. Really nice return. And I have a good position on United because, again, those fundamentals just look great behind it. The only problem with United is that they're an airline, and investors tend not to like airlines. But we'll see. Hopefully it continues to rise and United continues to make a lot of money and they continue to generate tremendous cash flow. But I think could really help the stock is if United started paying a dividend. I think that would really make it come up on the radar of all the dividend investors. It'd make it far more attractive of an investment for people to make in an airline. So that was United. It was a really interesting release. That was a fun one to watch. Another one that I haven't been able to figure out. I own a mid cap. You might even call them a small cap by the name of Ally Financial. And Ally is a financial services company, primarily doing financing for automotive. And they announced their earnings and their revenue dipped a little bit. And I'm going to get to your question on Catalyst one second. I think it's bad omen to ask that question, but let me finish my thought on Ally. So Ally's revenue went down slightly. They were more profitable than expected. So they beat their guidance on earnings per share. And I think that's what caused the rally. And everything else looked okay. Their net interest margin actually went down. So that was interesting. But I think the other piece of information that came out of it was that Ally's interest rate that they have on loans has actually been increasing significantly. So if you think about it, an automotive loan 2 years ago was probably at 5-6%. Well, now consumers are paying in the 9s, 9.2, 9.5. Ally gets to charge that now. So their revenue is really going to go up. And if you have a condition where you have lowering interest rates, Ally is really going to get really profitable. So the market really rallied on Ally. I think over 2 days, the stock went up 8%. and I couldn't quite put my finger on exactly why the market really liked their earnings. But that's what I'm thinking was appreciated. So now to the question: what do you think of Catalyst Pharmaceuticals, the one you reviewed before? So I think Catalyst is really an interesting investment for me. What I like about Catalyst is they're growing their top line revenue. They generate very good free cash flow and profitability. Their drugs are really selling well, and they continue to acquire. They acquired another company, and they continue to develop other drugs. It's a small mid-sized company, so it's not a giant company like a Merck or a Pfizer or a Bristol Myers. It's a small, compared to them, small company. I've done well with Catalyst. I think what's nice about Catalyst from an investor perspective is if you follow a stock like that, it has so much volatility that it's going to offer you really good prices to buy into the company. And then it'll go up and down, up and down. And if you wait for the market to really dislike it, it might discount the price by 10, 20, even more percentage points. And you can buy that company that you don't want to hold at the right times and then hold it over the long term. That's what I've tried to do. I'm up really well on Catalyst Pharmaceuticals. I'm glad I bought it. I'm not recommending you buy Catalyst or any stock that I ever cover. I'm always just sharing my experience as an individual investor. So keep that in mind. Do your own analysis. I'm going to share what I am seeing, but by no means am I making any recommendation. Hopefully that helped out. Bad omen. Keep the questions coming if you have them. All right. So what else happened this week that was really interesting? So we had the market go down 3 consecutive weeks. I think what's also interesting to note is the news is now buying into the negativity, and the news is really piling on the fact that you have a lot of downward prices. And what that's going to do, it's just going to, the downward momentum is going to continue because the news agencies, CNBC, Yahoo Finance, Bloomberg, you name it, they're going to really repeat stories that are negative. You better believe the Nvidia going down 10% today is going to be repeated, I don't know, 1,000 times next week. And the super microcomputer example of going down, I think they were down more than 22% today. That's going to be repeated because it's such a big splash kind of story. So all that negativity is just going to create more fear in the market, and that's good. That's good for investors that are looking at fundamentals. You can buy companies at a discount. I think we're too close to the top to say that, oh boy, we can get really great prices like we saw in the latter part of 2022. I think we're far away from that type of zone. But I think if the market continues to repeat this negative press, it could really offer up nice prices on companies where the fundamentals support a really good stock price. It's just people are selling off, and we'll see. All right. So one more question. Bad omen. Yeah, it does. Cool. Yeah, I appreciate the comment, Bad Omen. Good luck out there. And if you watch my videos, I'd really appreciate commenting and just getting into a conversation around an investment. The goal of my channel is to really just help me do better with my portfolio. And I think when I get into communication with other investors, which I do, is I always, if anything, learn from another investor, maybe study my information and my numbers that much more closely. And it just makes me a better investor. Also, investing is somewhat of a lonely, uh, activity. I love it. I love analyzing companies. It's so fun to find a company like finding Netflix in 2022 and buying big and watching it rise. Man, it's so fun. Or buying Meta. I was already a Meta stockholder. I've been a Meta stockholder for a long time, but I kept buying in 2022. And then to see that stock just hit a home run, a grand slam was so fun. So, but it's somewhat of a lonely activity, right? Like my wife has no idea what the heck I'm talking about. And my friends and kids are not into investing like I am. But when you have like-minded people on YouTube and we can kind of interact, if anything, in the comments, that makes making all the videos and so forth really worth it. So please keep the comments coming on the videos. And I really enjoy, making the videos. I'm also on Reddit, and I think I put the link on the channel. I think Reddit is a good platform to really have that type of communication. I know I'm in a couple of Reddit threads or whatever they call it, and there's really good dialogue there. So if you haven't checked out Reddit, check it out. I think it's good. It's a little bit, text based. It's not as good looking as YouTube, but I do spend a little bit of my time there. I spend most of the time on YouTube, actually watching other investors that I really get a lot out of, and just bringing that information into what I think I'm seeing and how I want to manage my portfolio. To tell you about a couple of investors that I do really appreciate. Tom Lee, I thought was really good. He's been good for about a year, and I'm not the only one saying that. If you want to watch what he says about the market for the past year, he's really been right. And what's important to point out is probably about a year ago, people felt that the market wasn't going to do as well as it did, and he actually nailed it. He said the market's really going to rally in 23. At the very beginning of 24, he said the market's going to continue to rally. A lot of people didn't feel that way. I didn't feel that way, and he was right. But as of late, I think the last time he spoke, he called that the pullback was going to end, I think, at the end of last week or at the beginning of this week, and he was wrong. But these super investors, Tom Lee is phenomenal. He's a freaking genius. But not all of them are right all the time. But I really appreciate how he thinks and how he explains things. So I like to listen to Tom Lee. The other one that I've been watching is Josh Brown. He has his own podcast. And, I get a lot out of just listening to other investors, not necessarily because I'm going to copy what they do, but their observation of the market is it kind of gives me more understanding of the market. And Josh Brown, a lot of the things he does and are not what I'm doing. He's more of a, Wall Street investor / trader, hedge fund manager. But when he talks about the conditions of the market, sentiment, what he's seen, it does reveal a lot of things to me. So I like to listen to him just so I can understand that, hey, are we entering kind of a market of greed and euphoria? And I got to be careful not to put too much capital out there, maybe pull back some capital, sell some shares, sell some positions, and, get some more cash going. So Josh Brown's been one of the guys that I really have enjoyed listening to. In addition to that, I like to listen to small YouTube channels, and it's probably, a list of 6 or 7. And each one I try to pick out, there's certain things that investor describes. And again, I'm trying to pick up on sentiment, how they view things. I may invest very differently, and but I could get, that type of, awareness of the market from listening to those investors online. That's what I hope I'm doing. Is I'm sure people listen to my channel and they're like, well, I don't invest like that guy. He's 55 and he's trying to retire early. Good for him, but I'm 25 and I'm trying to grow my portfolio aggressively. Awesome. I hope that's the case. But you could probably get something out of listening to every investor, whether they have the same investing methodology you have or a different one. And you can pick up on, the market sentiment, where the market is shifting to, potential opportunities, and then you align with what's going to work for you, So that's what I hope my channel puts out there, is just one more viewpoint, because I like listening to other investors, no matter if they're exactly, and I haven't found one that's exactly like my investing. So, all right. So I got another question. Okay. It's random. Recently got into United Healthcare. Looks good. So United Healthcare is a excellent company, and I think their stock's a little down. Let me take a look here. So I owned United Healthcare for several years. I did really well with them, and I got out of United Healthcare a couple of years ago, and for the last 2 years, they've been, and I call it sideways, meaning if you bought, let's say, at their peak, which was in the spring of 22 to now, the stock's actually down 8.2%. But they've had kind of a flat existence with some real drops in the stock price. So I'm hoping that, random, you picked up the shares at a really nice discount. The quality of United is right up there. It's United Healthcare's, probably the highest quality company in its industry, a healthcare payer, and everything else is compared to it. I compare every other. I own Elevance, which is one of their competitors, and I've been growing my position in Cigna. I got into Cigna, by the way, on a comment from a person that was viewing one of my videos. Said, "Hey, what do you think of Cigna?" And I looked at it, and holy smokes, the fundamentals were phenomenal. I was like, this is a great kind of mid-sized company compared to United Healthcare. And I've been buying into Cigna. So far, so good. But if you're in United Healthcare and you want a consistent, high quality company, that's everything is compared to United Healthcare when it comes to a healthcare payer. So good luck with that. You're in at 400. You're doing good. You're up about 11, 12%. So hopefully it keeps going up from here. I could see it going up from here. Healthcare. And if you see my videos, I've done a good number of videos on healthcare companies like Cigna, Elevance, CVS, Pfizer, and then some small, I'm going to call them biotech companies that are really cool. And my point of view is healthcare is going to go up over the next couple of years. It had a terrible 2023. If you look at the healthcare sector, 2023, it did terrible. And looking at 2024, it's doing kind of a repeat of 23. But we think, I kind of take a step back. The healthcare industry, we need it, period. And if the COVID experience didn't teach us that, I don't know what will. We need, medicine, healthcare practitioners, health insurance companies. I mean, the whole, complex of healthcare is a necessity. So when you have recessions, healthcare is a really good place to be. When you have boom periods, healthcare is going to be very consistent. So healthcare tends to be a consistent performer. So 23 was a surprise. The market will always teach me something. 23 is a surprise is how bad healthcare did. And so far, 24 is continuing how 23 was. So where am I going with this is I think that, I forgot who said it, Warren Buffett or somebody is, the stock price tends to be a voting contest. In the short term, it's a voting contest. Like, hey, which stock is the most popular? Hey, Nvidia is doing great. Hey, everybody buy Nvidia. But over the long haul, value, true value, the stock price will end up being a weighing machine, weighing value, weighing how much free cash flow is that company producing. Is their revenue growing? Are they growing their earnings per share? Are they buying back shares? That's true value, and that gets weighed over time. Healthcare has tremendous value. When you look at a healthcare company, whether it be a pharmaceutical company, a healthcare payer like United Healthcare, if you look at what they're doing, they're growing their businesses, top line revenue. Their profit keeps expanding. They keep buying back shares. And all those things to me matter. And I keep buying into these companies, knowing that like Meta, it came back and it came back really fast with a vengeance. I think healthcare is going to do something similar. Again, everything I share is just my individual perspective on my portfolio. I don't recommend any particular stock or security. And please do your own research on that. All right, so more questions. What do you think of leverage S&P stocks like XXX? So on I think what you're asking is index stocks, right? Or index shares. And it's my preference. Like I used to be an index ETF mutual fund investor. And it was probably at a time when a couple of things were going on. I was incredibly busy. I didn't have a lot of time. And second, maybe I lacked the confidence to really just manage individual stocks. I've owned stocks I'm 55 and I've owned stocks for 35 years. And so I wasn't afraid of buying, individual stocks. But really, about 10 years ago, I stopped buying ETFs and mutual funds and so forth. And the reason being is that I know the companies that I think I believe I know the companies that are going to do very well over a long time horizon. And I'd rather buy into those positions and keep everything else in cash or bonds than have somebody else who's really making decisions that I have no idea why they're buying a particular stock or a position. And I'm just kind of going along with an ETF that has a good reputation or an index, which like the S&P or, whatever other index one can invest in. That's a preference that I have. And I know really good investors that buy into the S&P ETF, and they're probably smarter than I am. But I'd rather buy individual stocks, and I do buy bonds. I think bonds offer a lot of value. You can buy corporate bonds. There's one corporate bond I'm making 11%, 12% now because interest rates are up. So that's how I view it there. Hopefully that gives you a little bit of insight on at least how I think. Omar O, are you retired? No, not retired. I enjoy what I do, working wise, but I do have a plan to retire early and have been, really setting up my portfolio to fund a great retirement and then just take care of my kids and help my boys with their plans in life, buying a house and all the other stuff that life brings. So, but don't be surprised if it happens and I announce it and say, hey man, I'm retired. All right. Random. This isn't right, but loosely XXXX is a times impact VO tracker. I don't quite understand that question, Random. If you could ask it maybe in a different way, I could try to answer it. Um, there's another thing that I don't get into, and I've tried it, but felt that it was not giving me the outcome I was looking for, and that's buying options. You know, buying puts and calls and so forth. And it's interesting. You know, you can make some income, potentially kind of hit some home runs there. But what I felt was that the way that I can consistently make very good returns year after year after year is just to buy the best companies that I feel are priced at the best price to get a very good return, and just constantly hold companies that have that type of profile. And my portfolio does change from year to year. I might sell a company altogether. I might trim back shares. Like I'm glad I trimmed back shares in Netflix. Um, but at the end of the day, the companies in my portfolio, I believe all those companies are good companies. And I rather buy the shares and over time just see that investment go really high and then sell when I think it's a good time to sell. There's some stocks where I sold at the right time. There's some stocks that maybe I held on too long. The one that I would say that, man, it's a company that I really hold in high regard is Taiwanese Semiconductor, TSM, and I bought that stock 6-7 years ago, and I think it was a 4 or 5 bagger, and then I sold all the shares because I thought, you know, the stock was overpriced. It was a really good investment, and then I got into other investments. So TSM was a big success. I took some of that capital and I put it into Intel, and I probably stayed in Intel too long. So I lost quite a bit of capital on Intel, and then sold out of Intel and stayed out of it for a year and a half, 2 years. And now I've recently begun to buy Intel because I think it's at a good time. I think things are looking up for the company and it's at a good price. All right, Omar, is it a bad idea to invest in individual stocks in a brokerage account, tax purposes? Of course. Yeah, so that is a very good question. Now, not sure where you're located, Omar. I'm in the US. And I know a lot of investors have a good part of their net worth in a 401k or a IRA or even a Roth IRA. Now, if you have a 401k that offers a way for you to invest in individual stocks, that's a pretty nice setup because you could be a day trader in a 401k account and never pay any tax on your gains, because when you're going to pay tax on a 401k is when you withdraw the money. So I have part of my portfolio is in a 401k account, and part of it, probably like 50-50, and 50% is in a after tax brokerage account. So if you do have access to that and you really want to be more of a trader or maybe an active investor, that's where I classify myself as I'm an active value investor. You'll never pay tax on that situation. And so buying stocks or ETFs or whatever, it has no tax consequence. Now, when you are paying tax, you got to be wise about it. Now, I'm not a tax expert. I do have an accounting degree, FYI. I do enjoy studying the tax code, but I've never done it professionally like for other people. I only do it for myself and my family. And I would tell you that if you have taxable gains on a stock, you could harvest your losses towards the end of the year on maybe some positions that are losing money. You harvest them. You got to, be careful with the wash rules, but you get out of a position to claim the loss, and then you match it up with one of your gains, and then you limit the amount of tax you're going to pay. You stay out of that position for 30 days, then you can get back into that position, and then try to manage your taxes that way. We just had tax day this past Monday. I sent the government a nice check for whatever balance of taxes I owed them. And I try to manage how much I'm going to send to the government. I keep it all legit because, you know, I make plenty and I might as well just pay my taxes. So hopefully that gives you an answer to that question. And I think part of your question was if you have an after-tax money brokerage account, everything you do there, if you sold it, it'd be taxable. Yeah, you're right that if you sold individual stocks, you'd be taxed on that. If you own an ETF or a mutual fund or something, somebody else is doing that. So you're not actively or taking a gain or a loss. So it's your preference. That is a good point. But as I mentioned earlier, my preference is to be in control of my portfolio and analyze the companies and buy the companies that I believe in. And then I'll manage my tax liability by trying to, limit how much I'm going to pay, or in the money that I have within a 401k, it never gets taxed anyway. So I could sell it at any time and not have to pay any tax. I will be paying taxes when I withdraw that money. So good question there. All right, good stuff. So I appreciate the questions. Any other questions? And if you want to put any comments there on what type of videos that you think I ought to do, I'd appreciate that. Ideas. I notice the videos that I've been creating, the ones that get the most views are the ones where I do more of a general video, like a video that I did where I reviewed the stocks that I am willing to buy going into this pullback that had a lot of views. And I also noticed that, certain stocks that are smaller, but maybe very volatile, those get a lot of views. But to my surprise, some of the best known companies like Meta and Alphabet, those don't get very many views. I think those companies are awesome. They're great to look at. And I like looking at companies like that because they're so valuable, and then trying to go find other companies that look like that aren't quite as big and haven't been discovered. A couple of those companies that I think are going to be big someday that are medium today are Uber. I think very highly of Uber. Most definitely their growth is incredibly good. Their technology, how global they are. I'm not a big traveler, but I was in Europe last year. I was in Italy and I was using the Uber app, and the winter between 22 and 23, I spent a lot of time down in Mexico City and other parts of Mexico. Uber was everywhere. And all over the US, I do travel the US quite a bit. I take Uber everywhere. And so I'm really impressed with their platform. They potentially could be the next Meta, the next Alphabet. The other company that I think very highly of is Airbnb. And I encourage you to watch the Airbnb video. I actually am a real estate investor as well. I invested in 2 vacation rentals, ran them for 9.5 years, did really well with that. Just was a great investment for my wife and I. But we sold both properties, but we were on Airbnb as well as the other platforms. So I got insight into what it really is, what the business of renting out a private residence looks like on Airbnb. And overall, the Airbnb platform, it's a lot like, it's the number one platform out there. And I think that could be the next Meta or Alphabet. All right. So a couple more questions here. Feels so risky to invest in a year like 2024. I know the feeling. We had a very good 2023, and some stock prices are really expensive. Technology, really expensive. Certain sectors are really expensive. But every single market, no matter what market we're in, will offer up value. And I think I commented, healthcare, it had a terrible 2023. So yeah, I get your comment that it did feel risky. If you watch my videos for the last 2 months, I started saying that, hey, this market's getting expensive a month and a half ago. And I continue to feel that it's still expensive in certain parts. A 5% pullback is one thing, but the S&P in 23 was up like 26 or 28%. It started 2024 just going up and up. So having said that, I agree with your sentiment that it felt risky that these prices are kind of high. But I continue to say that every market will offer good opportunity if you go find it, and you look at kind of contrarian kind of thoughts of, well, not every sector did great in 23. Which ones didn't do well? And are they setting up to really do well in 2024? And that's the question that we should ask, and continue to ask ourselves is, where is the value? Can you do a Udemy stock analysis? It's educational video company. And I'm taking that Udemy is the symbol. Let me see if I can look it up really quick. Okay, I see it. All right. So this Udemy it's a learning company. So I'm going to take a look at it and I will comment on this thread. Okay. That way I don't take up too much airtime looking at it. When it comes to education companies, I haven't hit any home runs yet. There's one company that caught my eye, and that's Chegg. And I've done a video on Chegg, and I do own shares of Chegg. Not a lot, just a little bit. And the reason I bought into Chegg is, I think it's a thought leader when it comes to helping students with, their subjects and so forth. And they have an AI business. It's a real AI business. If you go to their investor presentation, they'll take you through their AI business. Now, the whole AI hype has been, AI is going to do so many things, but rare is there specific examples of, well, it's actually going to do this one thing that is really helpful. Well, AI for a student, right? Like, I'm sure some of you guys have looked at ChatGPT or Google's version of it, and you go and you ask all these questions, and yeah, it's really helpful, but they could probably make it even better. You can be very subject specific and can really be a coach for you. And I think Chegg really does have a good business. It's in education, and that's the one company that I've got an investment in and that I thought was worth investing. I've also invested in other education businesses in the past, but didn't do well with them. So it's an area that I haven't mastered. But I'll take a look at this one and I'll provide a comment after the live stream. All right, good stuff. So, well, I appreciate you guys joining the live stream. Good luck in investing. It's the third week of down stock prices. And to a value investor, that's good news. It's like, great, stock prices are coming down, beginning to be discounted. That's all good news. I think 2023 is not going to be the only year that stock prices go up. They will go up in the future. Having a long-term mentality of, hey, I want to buy the best companies, hold them, and see that investment go up over time. That's what I keep reminding myself of, and that's what I believe in. All right, guys, Well, good luck out there. Thanks for watching my videos. Have a good night.